Gold price remains close to record peak amid fears of wider Mideast war. Gold price edges lower and erodes a part of the previous day's gains, though the downside seems limited on the back of rising geopolitical tensions in the Middle East. Furthermore, hopes that China's stimulus measures will revive physical demand could underpin the ZAO USD. 1. Gold price attracted some haven flows on Tuesday amid rising tensions in the Middle East. 2. Reduced bets for aggressive Fed rate cuts and stronger USD capped gains for the ZAO USD. 3. Traders now look to the US ADP report for a fresh impetus ahead of the US NFP on Friday. ZAO USD technical overview. The daily technical setup for gold price remains constructive as the 14-day Relative Strength Index (RSI) holds firm near 68.00, despite turning slightly lower. Gold price needs to yield a daily candlestick closing above the static resistance near $2,670 for a renewed upside. The next resistance is aligned at the record high of $2,686. Further up, buyers will target the $2,700 round level, followed by the rising trendline resistance at $2,730. Alternatively, if gold sellers flex their muscles, acceptance below the September 24th low of $2,623 is critical to unleashing further downside toward the $2,600 threshold. Gold sellers could then challenge the September 20th low of $2,585, where the 21-day simple moving average (SMA) hangs around. Fundamental overview. Despite persisting fears of an Iran-Israel conflict turning into a wider regional war, the Asian markets have calmed down a bit, as they believe that Iran may not pursue a full-fledged war with Israel and that it would urge de-escalation in the same way as it did after the April missile strikes. Iran's Revolutionary Guard said early Wednesday that Iranian forces on Tuesday used hypersonic Fata missiles for the first time and 90% of its missiles successfully hit their targets in Israel. Our action is concluded unless the Israeli regime decides to invite further retaliation. In that scenario, our response will be stronger and more powerful, Iranian Foreign Minister Abbas Araghchi said in a post on X early Wednesday. Tehran said this attack was in response to Israeli killings of militant leaders and aggression in Lebanon against the Iran-backed armed movement Hezbollah and in Gaza. If Middle East geopolitical tensions dissipate on no further potential aggression from Israel, the traditional safe haven, gold price, will likely come under renewed selling pressure. However, the US ADP employment change data and FedSpeak will be next of note for the US dollar and gold price, as the events could provide fresh hints on the size of the next Fed interest rate cut. The U.S. private sector employment is expected to rise by 120,000 in September, up from a 99,000 job gain in August. Tuesday's mixed U.S. is a manufacturing PMI and JOLTS job openings data failed to offer any clear signals on the direction of the Fed interest rate outlook. Meanwhile, Atlanta Fed President Raphael Bostic repeated that he is open to another half percentage point rate cut if the labor market shows unexpected weakness. Markets continue pricing in about a 37% chance that the Fed will lower rates by 50 basis points, BPS, in November, down from 53.3% seen at the start of the week, according to CME Group's Fed Watch tool. Besides, the news of Iranian bombings on Israel dominated markets and triggered a broad risk aversion wave, spiking up the safety bets in gold price, the US dollar and government bonds. Daily Digest market movers. Gold price might continue to draw support from rising Middle East tensions. 1. Iran fired a barrage of ballistic missiles at Israel on Tuesday in retaliation to the latter's aggression in Lebanon against the Iran-backed armed movement, Hezbollah, and helped revive demand for the safe haven gold price. 2. Israeli Prime Minister Benjamin Netanyahu promised that Iran would pay for its missile attack, while Iran said any retaliation would be met with vast destruction, raising the risk of a broader conflict in the Middle East. 3. The Job Openings and Labor Turnover Survey, JOLTS, published by the U.S. Bureau of Labor Statistics, BLS, showed that the number of job openings unexpectedly increased in August and stood at 8.04 million. 4. Separately, the Institute for Supply Management, ISM, reported that its manufacturing PMI remained unchanged at 47.2 in September, pointing to a contraction in the business activity for the sixth straight month. 5. Investors are still assessing the likelihood of another 50 basis points interest rate cut by the U.S. Central Bank in November after the Federal Reserve Chair Jerome Powell's relatively hawkish comments on Monday. 6. Powell said that he sees 2 more 25 bits per second rate cuts this year as a baseline if the economy performs as expected, though the CME Group's Fed Watch tool indicates over a 35% chance of a supersized rate cut next month. 7. Atlanta Fed President Raphael Bostic noted on Tuesday that the U.S. Central Bank should be willing to explore more outsized rate cuts if the jobs market deteriorates and the PCE data showed disinflation still on track. 8. Market participants now look forward to the US ADP report, which is expected to show that private sector employers added 120,000 jobs in September as compared to the 99,000 previous, for short-term opportunities. 9. The focus, however, will remain glued to the closely watched official monthly employment details, popularly known as the non-farm payrolls, NFP, report, which should provide a fresh directional impetus. Technical outlook. Gold price dips towards the $2,625-$2,624 pivotal support could be seen as buying opportunity. From a technical perspective, the overnight strong move up reinforced a short-term ascending channel resistance breakpoint, turning support near the $2,625-$2,624 region. The said area should now act as a key pivotal point, which if broken decisively might prompt some technical selling. The subsequent downfall could drag the gold price below the $2,600 mark, towards the next relevant support near the $2,560 zone en route to the $2,535-$2,530 region. On the flip side, the $2,672-$2,673 area might continue to offer immediate resistance ahead of the $2,685-$2,686 zone, or the all-time peak touched last week. This is closely followed by the $2,700 mark, which if conquered will be seen as a fresh trigger for bullish traders and set the stage for an extension of a well-established multi-month-old uptrend. What does the price of gold depend on? The price can move due to a wide range of factors. Geopolitical instability or fears of a deep recession can quickly make gold price escalate due to its safe haven status. As a yield-less asset, gold tends to rise with lower interest rates, while higher cost of money usually weighs down on the yellow metal. Still, most moves depend on how the US dollar, USD, behaves as the asset is priced in dollars, ZAW, USD. A strong dollar tends to keep the price of gold controlled, whereas a weaker dollar is likely to push gold prices up.
Friends, thanks for watching. Please subscribe my channel for more videos.